Hello everyone and welcome back to my channel. Whenever you come across the annual report or the investor presentation of a bank, you will always come across a term called NPA or non-performing asset. What exactly is an NPA and what is the significance of it to a bank? Let's find out with a very simple example. Let's say there is a bank named Bank A. It has given a loan of rupees 100 to a person named Mr. A. Now, Mr. A is having financial trouble and he is not able to repay the interest and principal on this loan of rupees 100. The loan remains overdue for more than 90 days. Now, as per the RBI regulations in India, whenever a loan remains overdue for more than 90 days, it becomes an NPA. Now, Bank A has total loans of rupees 1000. Now, whenever you take a loan, it is a liability for you because in the future you have to repay that loan with your own money. In the same way, bank is the one who gives out loans to borrowers like us. As a result, these loans are assets for them. So in banking, loans and assets are used interchangeably. Let's say Bank A has total assets of rupees 1000. Out of these total assets of rupees 1900 are standard. That is, the interest and principal repayments on these loans are regular. However, Mr. A's loan has become an NPA because it has been overdue for more than 90 days. Now, in banking, this NPA of rupees 100 can also be called as a gross NPA because no deductions have been made. Whenever there is an amount where there are no corresponding deductions made to it, it can be called as gross. Now, let's calculate the gross NPA ratio for Bank A. The formula of gross NPA ratio is gross NPA divided by total assets or total loans of the bank. In this particular case, Bank A has total loans or total assets of rupees 1000. It has gross NPA of rupees 100. So, the gross NPA ratio of Bank A is 10%. Now, you might be wondering, if gross NPA is rupees 100, then what is the net NPA for Bank A? Now, let me give you another simple example. Let's say I am going to go on a trip next month and I expect to spend rupees 1000 on that trip. It would be wise for me to save 1000 rupees in advance. In the same way, Bank A has an NPA of rupees 100. In the future, there is a possibility that Mr. A might only be able to repay 70 rupees out of the 100. Or in the worst case scenario, Mr. A fails to repay the entire amount. So, whenever this actual loss happens, there is a possibility that Bank's A profit and loss account is hit badly because of a huge NPA. So, Bank A will create what is called a provision. A provision is money set aside by a bank in advance for the expected loss that is going to arise because of a gross NPA. Let's say Bank A sets aside rupees 50. Now, this 50 rupees will be debited to the P&L account of Bank A. So, its profit during this year would come down by rupees 50 because of this provision. The amount that we get after reducing provision from gross NPA is nothing but net NPA. So, net NPA in Bank A's case will be rupees 50. Now that we have net NPA, let's calculate the net NPA ratio. Net NPA ratio's formula is similar to gross NPA ratio. Net NPA divided by total loans, which is equal to 50 divided by 1000 equals to 5%. For a bank, asset quality is extremely important. Asset quality is nothing but how much of the bank's total assets are standard. A good quality bank will have a higher proportion of standard assets and a very small proportion of NPAs. So, whenever you are looking at a bank for investing or to open an account, it is very important that you check their gross NPA and net NPA figures. Lower the NPA figures, better it is. Some top quality banks in India have gross NPA ratios as low as 1% and net NPA ratios as low as 0.3 to 0.4%. I hope now, whenever you come across a bank's balance sheet, you are easily able to calculate NPA ratios on your own. If you have any doubts, then feel free to mention them in the comment section. I would be glad to answer them all. If you have any video suggestions or you want to discuss anything else with me, then you can connect with me on social media. I've put the links in the description box. If you like this video, please give it a thumbs up and subscribe to HJ Invests for more such interesting videos. Stay tuned. Thank you.